Lovely introduction. So good afternoon all. I think my screen is visible. Shika, can you confirm?
Yes, yeah, it's perfect.
Perfect. So thank you. So today there is a lot of things in the PPT, but I wanted to make it very simple and keep it more practical rather than going into an interpretation of various terminologies which has been there as far as the statute is concerned. Getting into those integrities, I wanted to cover more from a business impact what has happened from the changes which is there from the 1st of January. You have to understand that why we are talking about 1st of January. So there is a background for understanding the changes from 1st of January. Few are a bit before that also, which I have covered, which is relevant, but majority is revolves around 1st of January here. 1st of January, what happened is that there was the proposal which was done in the previous budget, the budget which happened in 2021, which was introduced as a amendment bill, which got passed with both the House of the Parliament and the President said. Under GST, this is not sufficient. What they have to do is they have to do the amendment of the various state GST laws which has been there. So it has to pass through all the state assemblies. Then the law can be in an implementation position. Based after that, they are going to give a they are going to give an effective date for it. So that is how this effective date for a Finance Bill 2021 happens to be 1st of January 2020. That means the proposal which is going to come in this Finance Bill 2022, somewhere the effective date will be the end of 2022 or early 23. So that is how the law is been getting changed as far as the GST is concerned, which is in a very, very slow pace. So what we have done is we have done this topic into the three segments. One is some general changes which has happened, specific changes, sectorial wise, some changes has been happened, and there are some important judgment. So between me and my partner Venkat here, I'll be taking the first portion, whether the general changes which has been there, and the second and the third portion will be covered by Venkat Prasad. We have a very good advantage of using this particular technology. Generally, when I was addressing a seminar, I don't want to get disturbed with my flow. So I always request if you can post your question at the last, so that I'll not get missed or get sidetracked. But the advantage technology here is that you have a Q&A box here. As and when you get a doubt in any of this particular slide, you could always put the question there so that you are not missing from your mind. And at the end of the question answer session, I am going to, me and Venkat, whoever the relevant is there, we are going to try and answer all the questions which is possible. The PPT will be also available for circulation. I don't know if Shika, you have a mechanism of mailing to all the participants. You could go ahead and free to mail the PPT which we are using. So you need not put more efforts in taking the notes of these particular slides verbatim. That is also not required. So with this, let's get into the introduction of the amendment which has been there. The most of these amendments have been there, have been looked at from a tax evasive point of view, and unnecessarily the common businessman who is not involved in such evasion, he is also getting punished. So the entire budget amendments will be looking at that to stimulate the economic growth. But of late, the budgets have been only looking at a revenue increase and the tax collections alone, and they are not looking at a holistic approach for the economy or a business as a whole when the taxation proposals have been looked at budget year on year. So the lawmaking authority is the GST Council. They are also losing short of what amendment is benefit to whom. And most of the cases, there is no debate which is happening on any of the amendment which is getting proposed, which has been given from the bureaucrats who's the law forming committee which has been there. Whatever it comes is mostly is getting approved without much of deliberation. So the deliberation is not sufficiently happening, which should be happening. That is how we have been looking at. So the GST department is having a high pressure for revenue collection. You are looking at the newspapers where they are looking at the targets, revising the targets. They say 1,50,000 crores collection, and they say we are short this month. Next month we are going to do it. So they're more looking at a number game and more of a sales executive sort of a thing which they have been looking at. So which makes a lot of genuine taxpayers also get suffered. So this is a beautiful cartoon which has been compiled by my office, where the law is intended, all the ITC restriction which I am going to explain was something to restrict this bogus taxpayer. But when the law is affected, a genuine taxpayer is getting affected. So let me explain that when it comes. So this is what the changes which is there as far as the ITC matching is concerned. So as far as the ITC is concerned, most of you would be aware that for ITC is nothing but a tax paid on my expenses, which will be available as a set off when I collect the tax from my customer and remit to the government. So whatever the tax I paid it to the vendor, it could be a service vendor, it could be a goods vendor or a capital goods vendor. It will be looked as more of an advance tax which you have paid from your pocket, which in a future date you will be collecting from the customer and making it good. Any excess which you have to pay, which is been less of your advance tax, we will pay to the government. So this is a practical way of looking at the entire input tax credit. So what has happened actually in the input tax credit in the old law, you are eligible to take the input tax credit as and when invoice has been given by the vendor where you could show that the so and so tax has been charged. You are eligible to take the credit. However, as far the GST is concerned, they brought everything into a technology framework. Everything is been digitalized and computerized, and they are trying to match the credit which has been taken. Initially 2017 they wanted to introduce something called as a matching concept, which was actually in my view is a very beautiful concept. We should the trade and industry to work to get back the matching concept rather than the existing 2A 2B structure which has been there. So that matching concept, what they told is that your vendor is going to file one, which is going to come and auto-populate into two. The changer in the matching concept was that in your two, if one of your vendor is missed filing, you could file your two, adding that particular invoice that will go and sit in his 1A and auto-populate in one. Thereby, he'll be forced to show that particular turnover and pay the taxes. So this is how a matching concept was being introduced, which somehow was deferred. All this provisions has been kept in abeyance and they have deferred it. And there was no restriction for taking any credit unless it is a blocked credit. So that is what was there as far as the law from July 2017 to October 2019 is concerned. From 2019 October, what they did is they bought a restriction of a credit where they told you match your credit, whatever is there in your 2A or 2E, 2B, there was a confusion, 2A or 2B. In addition to that, you will be eligible to take a buffer credit of 20%, which was ready to 10 and to the 5. So now what they are looking at, they have removed this particular buffer. From 1st of January onwards, you will be eligible to take the credit only if the credit is eligible, it is visible in your 2B. So when it is visible in your 2B, only when your vendors have filed GSTR1 returns. So GSTR1 returns has been filed, uploaded, it will be showing in my 2B. So only when it is there in the 2B, then I can take the credit. You have received the goods, you have paid for it, you have a valid invoice, but for some reason it is not there in your 2B, you are not eligible for it. So that is a law which is happening as far as 1st of January 2022. There are some practical things which we have to look at from a business point of view. Now, this is the law. You have an option to challenge it. Unless until it's challenged, it's been stuck down. This is the law and one has to follow this particular law. Whether it is fair, unfair is not been looked at when you are looking at an implementation of the law. If you feel it is an unfair, through an association like Indo-American Chamber of Commerce or any other association or a business, you could look at representation and show the government how it is impact. Otherwise, if you feel it's not valid, you can also challenge in the High Court. But for these two, anything is not happened yet, you have to follow the law. That is something which we need to be aware of. So there is something called as a GSTR 2A and there is also called as a 2B. These both are not same. So the law make a specific reference to 2B and not in 2A. Now, how it will come in GSTR 2A? In GSTR 2A, if my vendor is just saving it, as and when he wants, he is getting into GSTR 1, he is saving it, it will come and reflect in 2A. Unless until he has uploaded, it will not come in my 2B. So that is the difference between 2A and 2B. So thereby, if it is there in 2A, you cannot take a shelter. It has to be there in the 2B. Then only you will be eligible to take the credit. So this is the provision which has been there, which is 16(2) AA, which has been introduced as one of the conditions for taking the credit, where this clearly says GSTR 1 should have been filed, then only you will be eligible, and that should be visible in your 2B, then only you will be eligible to take the credit. There are few things which will go out of it. That is your bill of entry. When you have imported the goods, you are paying the GST using a bill of entry. So when you are importing that goods, it will be not forming part of your 2B, but still you will be eligible to take the credit because this condition would not apply there. And in case of input service distributor and a reverse charge mechanism where I myself will pay under reverse charge mechanism, you will be eligible for taking the credit. So, but one thing which has not been addressed here is that there would be a genuine case where vendor has paid the tax, it has gone to the credit of the government, but it is not showing in my 2B for whatever reason, maybe a clerical reason or whatever challenges, technical reason. Department is getting taxed twice and department is getting an unjust enrich. This is not something which has been addressed in this particular amendment. So these were few points as far as the matching concept is concerned. Now, whether the levy is, whether it is legally valid, as I told that unless until you challenge, this is the law which you have to follow. There are certain case laws where there has been a challenge which has happened right from Arise India, which was a Supreme Court decision in case of VAT. Many of you are prior to introduction of GST, many states had this matching concept under VAT, like it could be Karnataka, it could be Andhra Pradesh, they had this particular matching concept. So from there, there were certain cases which was being done where there was a restriction of the credit to the dealer when his purchase or his vendor dealer has not uploaded the VAT returns. So this was questioned and Supreme Court told you cannot penalize the recipient. You have to give him a benefit if the tax is being paid by him to the vendor. So this was also followed by the GST decision in case of Quest Mechanized India, ONCI designs, and all those things has been followed. However, after all these things, there is a condition for availing a credit, 16 AA, which I showed you, 1 AA, which I showed you. If whether these case laws are going to be relevant after a specific condition for taking a credit, we have to wait and watch, because there are certain case laws which they have told the input tax credit is a right, but it should be subject to a condition which has been fulfilled. It cannot be unconditional right. So if a condition is not been fulfilled, you cannot claim it as a right of yours. So we have to wait and watch how the law is going to evolve. So there are certain practical issues which one would be facing in terms of, say, airlines or a CHA or a bank charges. Unless until you are updating your GST number, it will not be part of your GSTR 2B. Thereby, you will not be eligible to take a credit. So one, you have to ensure, you have to month on month, you have to look at what sort of a vendor where it is not reflecting in your 2B, like a banker, or it could be even your telephone, internet connections, where the KYC documents have not been properly uploaded. So you have to go and fix all these things. Otherwise, you will be losing this credit because it's not part of your 2B. A lot of things which have been happening as far as manual matching concept is concerned. There are a lot of softwares where you will be able to identify which are the vendors who are not doing it and go and speak to them, which is very important. And what exactly has to be looked at is your internal system has to be becoming more strength, your expenses accounting and your reconciliation systems has to be more stronger, which is very, very important. There cannot be a delay in posting of an entry. There is something which your vendor has already uploaded. It's part of the 2B, but you have not accounted that purchases for some reason. Then it will be part of the next month you are taking. It is not part of the 2B in the next month, but it is there in the previous month. So these are the things which could go into the dispute. One should be aware. So you should have a strong accounting policy and a system which is going to be there. Vendor master cleanup is very, very important. Look at the vendors, do an ABC category of vendor. A are very good vendors, they are doing an 100% compliance. B are the vendors, they are not doing a compliance in everything, but they are doing almost in everything. So monitor the B and encourage them to become A. And C are not good vendors. You could always ignore these vendors, try an alternative vendors for them, or discard these particular vendors. So that is how you need to take a call now. Otherwise, you will be losing a lot of money or GST by not taking the credit. Regular matching and reconciliation on a month-on-month has to happen. Otherwise, if it is not done on a timely basis, you will be losing the credit. So these are few practical aspects which you need to be working on. And there are certain challenges in terms of I am your vendor and I'm filing the return instead of doing a B2B. I have done it on a B2C, but I have paid the tax. Everything is there because it is there in the BTC. You are not getting a credit in your 2B, but the tax has genuinely gone to the department. Here also there is practically there is a double taxation. You should be made eligible for the credit because of want of entry in 2B. You will be restricting for the credit. So these are the few challenges which has been there as far as the 2B is concerned. So you should be very clear as putting all these aspects in place so that you are not losing on the credit. So the next amendment which is there is blocking of your GSTR1. So most of you would be aware there are two returns which every vendor has to file. One is called as a GSTR1, which is only a summary of the sales. Then there is GSTR 3B, where you are making a payment of tax after considering the input tax credit. So GSTR 3B is where you take an input tax credit in electronic credit ledger and you are utilize it for the payment of the taxes. So that is how the two returns has been designed to work. So now what has happened is that there was this introduction of Rule 36, where they told that you could take the credit in excess of maximum 5% of your credit in your 2B. That was particular law which was being there, although that could be questioned up to 1st of January. After 1st of January, because it's part of the act, you will not be able to question it. So when these sort of the things were there, people started stopping the payment of the vendor, saying that I have not found your entry in 2A or 2B, as the case may be, so I'm not going to give you a GST number, GST amount. So all these vendors, what they did is that, okay, you want entry in 2A or 2B, right? Done. I will upload my GSTR1. You got an entry, give me my money. After uploading GSTR1, either I file my GSTR3B for a lower amount than actual payment, because there is no link from GSTR1 and 3B. That means GSTR1 says a liability of 10 lakhs. 3B, I'll pay 2 lakhs and upload. 8 lakhs is unpaid. This is also possible, or I will not at all file my 3B. So these sort of people were taking an advantage, and still government was not getting their timely revenue, which they were aiming at. So they have brought out an amendment which has been there in this particular entry, where they told that unless until you have not furnished your GSTR1, GSTR 3B for the previous month, this month GSTR1 will not be able to happen. You will not be able to upload. That means to say, I am in month of January GSTR1, I'll upload. 3B I'm not uploading. February GSTR1 I'll not be able to upload unless until January 3B I have uploaded it. So for me to upload January GSTR 3B, I have to make the payment. Then you can say, Sudhir, you just now told that 3B I can do it for 2 lakhs. I can also make it for nil, and still the 10 lakhs is unpaid. So how are they going to, what they are going to achieve? What they have done is that they have also made a recovery provision where they say if you have disclosed in GSTR1, it is not there in your 3B, they can go for an automatic recovery. So the recovery mechanism has been put there. So anybody want to do this, the difference will show up between 1 and 3B in the portal of the department, and straight away an attachment and a recovery notice will be given and the amount will be collected. So thereby that safeguarding the revenue and also the entry in the 2B will be ensured. So this is one of the amendment which has been there. Then Invoice declared in GST, if it is unpaid, it can be recovered. So this is what I was talking about. So if it is there in GST R1, if it has been short paid or not paid in 3B, they can go for a direct recovery of the tax without issuing any show cause notice. So earlier, unless until it was declared in your 3B and it was not paid, it was an auto recovery. Otherwise, they were supposed to give you a show cause notice, give you an opportunity of being heard, pass an order, wait for the appeal period to complete, then go for a recovery. All those things has been done away with. If there is a difference between 1 and 3B, whatever excess is in 1, they can straight away come, attach, and take your money, do the recovery proceedings. Now you have a change in the provisional attachment also. Earlier, the provisional attachment prior to January, it could be done where there is a pendency of any proceedings in terms of your notice or your scrutinies, various things which has been pending, then only they could have done. Now the amendment is being changed only for initiation. If I start an investigation, I have initiated the investigation, then also it is sufficient to attach the property. Please please look into this. The entire these things has been done with a bogus invoice and all those bogus entries which the people were doing. But many of the genuine taxpayers giving these enormous powers to the officer will be getting stuck, because it could be interpreted for every country. That is how it could be looked at. So they can attach, there is an attachment, what you call the notice, the circular has been given, a guidelines has been given where it can be attached. It says only in case of this bogus invoicing, billing, purchasing the bill and collected not paid beyond 3 months, erroneously refund. Only in these cases you will be able to do an attachment, and not in every cases. So there is also an very important decision of the Supreme Court in case of Radhakrishna Industry, which is a 2021 decision which was followed by the Gujarat High Court also. They have given a certain things as to when an attachment can be done. They have made it very clear. This is a very, very far power which has been given. It cannot be exercised as a normal routine. It has to be done in an extreme circumstances. It is not intended to harass the taxpayer, and there has to be a proper mechanism is there. So this is what they have told, while upholding the provision of a provisional attachment which was challenged. So that is that particular amendment. Then there are certain amendment where they have changed in case of the detention, seizure, and confiscation is concerned. So most of you are aware that whenever the goods movement has to happen beyond 50,000, there is a requirement of doing an e-way bill. So if there is an e-way bill was not been there, or there was an error, or there was some deviation, or it was expired, or whatever reason, then your vehicle has been stopped, and your goods will be detained till you have paid the money. So up to 1st of January, what they were asking is, they were asking you to pay the tax upfront and 100% penalty if it was a taxable goods which you are exporting. And in case you are not willing to pay, volunteering to pay the tax, then you have to pay the tax plus the 50% of the value of the goods was considered as a penalty, tax plus 50% of value of the goods. So this is what was there as far as this provision was concerned. Now they have replaced with the new penal provision where they say, I'm not going to collect tax from you, because tax anyway, when you have done an invoice, anyway you are paying it. Whether I collect or not in next month 3B, anyway you are paying the tax. So I'm not interested in that. You give me 200% penalty if there is a challenge in your EVP. So now 200% penalty is a huge amount. Earlier they were paying 100% plus 100%, 100% is your tax. But anyway, they paid less in the 3B when they're uploading it. It was only a 100% penalty. Now that 100% tax, anyway, they have to pay plus 200% penalty. So this has become a huge burden, and 50% of the value or 200% of the tax penalty, whichever is higher in case you have not admitted. So that is what they have been looking at this particular provision. And if you are not paying this particular penalty, then it can be, goods can be straight away confiscated, and your vehicle could be detained and things like that. So this is again a very, very powerful tool which has been given. So this requires one to be very organized in terms of their e-way bill, the way when they are generating the expiry and things like that. So one has to be very, very clear about it. So there is also a recovery of penalty by sale of goods or a conveyance. So that procedure of e-auction and disposable within 15 days and all those things also, there is a small procedure which has been laid on. Then there are other few small amendments where they have made an Aadhaar authentication compulsory. So this is also in the view of all the bogus dealers which were there, where they were not at all being found. So thereby they are making an Aadhaar authentication for any application, either for refund application or revocation or cancellation. Also, they are looking at an Aadhaar authentication in addition to a new registration, which one has to be taking. There is also a small exception which has been given, that is in case of this government establishments, this UNO organizations and things like that, public sector undertaking, this authentication has been excluded. Rest everybody has to go to the exclusion. So there is a return which is called as a GSTR 9, which is an annual return, which was supposed to be filed for the financial year ended 21 by 31st of December 21. They have extended this to 28th of February. Same with GSTR 9C, which is a reconciliation statement, which is a self-certified statement without going into a chartered accountant. That is also extended up to 20th of February 2022. There is a return called as ITC 04, which is a job work return. Simple return, how much you have spent for job work, when you have got back. So that also they have intimated the periodicity of that has been changed for off yearly in case of turnover more than 5 crores and all other cases once in a year only. So earlier it was to be done on a monthly and quarterly basis. It was first monthly, then quarterly. Now they have made it off yearly, and in many of the cases it is 1 year. They also prescribed a 2 years time limit for all the recurrent cases for incorrect payment of tax, which has been happened. That for that also they have given a 2 years time limit. Anti-profiteering has been extended to be functional till November 2022. This is what they have extended as far as the anti-profiteering provision is concerned. Then coming to my last slide, there is refund claim by a foreign diplomatic mission. So that has to be applied with a unique identity number of the applicant, with all the invoice copy should be supplemented. So that is a small procedural thing which they have given. And there is a one section 151 which allows to collect certain statistics to look at for looking at whether there is any deviation by any particular person. So that statistics can be collected only with a few people earlier. Now they have given a wide power to collect the statistics with by anybody regarding any other assessee. So that there is a wide power which has been given as far as the information gathering is concerned. So this completes my first portion of my talk. So I am leaving floor to Venkat Prasad, who is already there, my partner. So once Venkat will complete his presentation in next another 30 to 45 minutes, we will try and resolve all the questions which has been answered. If there is any answers which I can type it in, I will type it in the while Venkat is taking his session. So thank you for now, and I'll be back for the question answer session. Over to you, Venkat.
Is my screen visible?
Yeah, Venkat.
Presentation is visible, no?
Yeah. Concept of
yes.
Yeah.
Okay. Right. 1 second, sir. The full screen is visible, no, sir?
Full screen. Go ahead.
Okay.
Go ahead.
Yeah.
Go ahead.
So far, we have Sudhir sir has covered the changes which are applicable to almost everybody. That is changes in general. That is common changes. Whereas now the coming slides, I would be covering some sector specific changes like restaurant or transport or this clubs and association, and followed by the some important decisions that were delivered under GST by various courts in last 3-4 months will be covered. So now I'll deal with the sector related changes. As far as first related sector is the club or association related. So there is a very big background to this change. I'll not take too much of time on that. So basically, in the service tax and VAT, the department tried to say that whatever the associations or clubs collect money from their members, it is liable for sales tax or service tax. If it is for supply of sale or material like food and all that, they try to levy VAT, and if it is a services, they attempt to levy service tax. Both of these two are disputed, saying that club and association and are its members all are one and the same. They are not different. This concept called principle of mutuality, and it was there in income tax also. They, in that background, they told so it will be a self service or it will be self sale. So thereby there is no VAT liability and service tax. That is was recently held by, not recently, during 2019. So Supreme Court has given a decision saying that by principle of mutuality, both sales tax and service tax cannot be levied on the clubs or association on the amounts collected from its members. So the same rationale will applicable to GST also. So to overcome that Supreme Court decision, what Government of India has now done is that they have made clear-cut provisions to overcome that deeming fiction, and said that both are different and they can levy GST. So this is the background of amendment. So the impact of this amendment would be that whoever associations or clubs so far have not paid GST on the receipts from members, so they may have to pay even for the past period. Now the question comes is wherever I'm paying for past period now, is there any interest liability? To this answer would be that because it has come in way of retrospective amendment, we can argue saying that interest is not liable. So there are some judgments which I've quoted in my presentation also to say that interest is not liable whenever there is liability has come by virtue of retrospective amendment, that we can take a reliance. And wherever there are some residential complex or residential associations are there, for example, any apartment or gated community, there are monthly contributions are also be taken. So they're also, come under this amendment. So they also end up have to pay GST. If their amount, of course, there is some exemption where they says more than, if it is the amount contribution per a month less than 7,500, they are not liable. That is exempted. If it is more than 7,500, then GST is liable. Here again, there is another. So wherever contribution exceeds 7,500, it is better to start pay GST and collect from the members, so that future litigation, future disputes will not be there on the association, because that will impact all the members. And also there is another interpretation that wherever the 7,500 amount suppose I collect 10,000 per member per month, so should I pay GST on the 7,500 or 2,500, that is in excess of 7,500 or 10,000? That dispute is also there. However, for that dispute, the government circular says 10,000 liable for GST. Whereas recently Madras High Court, which was also cited in my presentation, where they says only 2,500 they are liable for GST. So this kind of valuation issues also there. But keeping that aside a moment, so clubs or association, wherever people have not paid so far, it is better they start paying GST now and collect from members. For the past period also pay GST, and interest liability we can ask for a waiver because of retrospective amendment. And whatever the input tax credit which was not taken in the past, that can be taken now. Of course, that is again the dispute, but can take and adjust for the past liability also. So that is change as far as the clubs or association is concerned. This is another change related to the transportation passengers. This is basically related to this e-commerce operators. So like Uber or Ola, like various players who customer books the vehicle or the transport vehicle in this Android app or any app. So earlier what used to be there is of course earlier also they used to pay GST on the unlisted transaction wherever this kind of transactions happens. Now the change is that not only there are some exemptions in the past, like non-AC cab that is exempted from GST even if it is taken through e-commerce operator, that is Ola and Uber, or similarly like auto rickshaw, that is three-wheeler auto rickshaw also. there is exemption from GST. So now what is the change is that those auto rickshaws and non-ACs also, they made liable for GST. The exemption was removed, and GST has to be paid by that e-commerce operator, that is Uber or Ola, not by the auto rickshaws or non-AC cabs. By virtue of this change, there would be a incremental GST on, there will be increase in rates of auto rickshaw and non-AC cabs by minimum of 5%. It may go to 12% also. So because those are liable for GST now. And of course, this change was challenged by the e-commerce operator, saying that there is a disparity. The same auto rickshaw was taken by the customer directly from the auto wala. It is not, there is no GST. Whereas same rickshaw was booked through Uber, it is available to GST at 5% or 12%. That was challenged in the High Court. However, High Court so far has not given any final verdict. So most likely may have to wait to see. But as a matter of law, because it's giving exemptions or prescribing GST rate is matter of policy. So most likely they may not set aside, but we have to wait and see. So as of now, the law is that whatever the auto rickshaws or non-AC cabs, if it is booked through e-commerce operator, you end up paying more GST. Thereby you end up paying more. Already you would be paying more, but now with this amendment you will be end up paying more. That is one. And if it is taken directly by customer, there will be less amount. This is the impact of this change. And the another change, important change, is that this restaurant services which are supplied through e-commerce operator like Swiggy, Zomato, and all that. So now the change is that earlier restaurants, if their threshold limit exceeds 20 lakhs, they used to register and pay GST on their sales, be it takeaways or be it dine-in, everything. Now the change is that whatever the online bookings, that means the restaurant which supplies food through this e-commerce platform, it is not the restaurant who has to pay. It is that e-commerce operator like Swiggy, Zomato has to pay GST on the amount collected from the food. For example, if biryani is ordered through Swiggy, earliest restaurant, their turnover exceeds 20 lakh, they used to charge GST at 5%. Now, for the customer, there will not be big change, because earlier restaurant used to charge. Now, Swiggy will charge. So as of now, at the end, the final amount goes to the customer will not make a difference, because it is only change of person paying GST. This was done because the background that there are many restaurants in India, be it a small or big, though despite they are doing the sizable business of food business, they are not paying GST by distributing the turnovers to various persons, or they are not declaring correct turnover. So to overcome that, now that government for them, instead of going to all thousand or lakhs of restaurants across India, that now for them it is easy to say that whatever the online bookings happened, let that e-commerce operator pay GST. And now with this amendment, the government can collect all total GST across India on online food bookings from not more than 10 companies, because in India, largely this food business will be done by these 2 companies. Of course, their small portion will be done by other companies. So this is their strategy of the government. So here again, there are this amendment will have a lot of practical difficulties in the compliance by the restaurant as well as the e-commerce operator, because it is not that all business done through Swiggy or Zomato is made shifted liability on the Swiggy or Zomato. It is only these which are to be food which has to be cooked and supplied to the customer. Like for example, in other words, the ready food like ice cream and all that, the government says that is not a service, that is a supply of goods. Thereby, this change will not impact. It's still the restaurant has to pay GST on that, not the Swiggy or Zomato. This is the tough situation for the restaurant to decide which is the goods, which is the services, because whatever they decide, department is going to tell something or other. Like there is already dispute on that ice cream, where they says because ice cream is ready-made food, so it is not a service, so you pay GST at 18% or 28%. Whereas restaurant will, like any food, they'll also be keep it ready and give it to the customer. So for the restaurant, it will not change, but the GST law, at least government is looking at it differently and saying that ready food is it is not covered by this change. It is still restaurant which has to continue to pay GST on that. and only the cooked food which has to be cooked and served, then only has to be impacted by this change. And it is Swiggy, Zomato will pay GST on this. Restaurant will need not pay GST again on this. As far as the other business like in-house dining or direct delivers by the restaurants, there are some restaurants who have their own setup where they either their telephone booking or their website booking, they'll deliver the food at home. So those cases, restaurant which are continue to pay GST, they have to pay. It is only the supplies done through e-commerce operator only they have to pay. Otherwise, every other compliance remain as is. There is no change. And wherever the customer comes directly and takes the takeaway food at counter, that is again there is no change. Restaurant has to pay. So in a short, the change is that wherever the cooked food has to be, so we are served through this online platform like Swiggy and Zomato, other than the restaurant. So then the restaurant need not pay GST now. It will be paid by the Swiggy or Zomato, and so restaurant need not collect GST. That will be collected by the Swiggy and Zomato. This is the sum and substance change. There are various practical questions that will come. Of course, some of them are answered by the circular 167. Which out of that, some are legally not correct, but the clarifications is still there. So as far as practically there will be some problem, because suppose the customer raises a food order for the biryani as well as ice cream. Here strictly going by the government clarification, they says ice cream is a supply of goods and biryani is a supply of services. In this case, as far as ice cream sale, GST has to be paid by the restaurant. As far as biryani sale, the GST has to be paid by the Swiggy. The question is, there two invoices has to be issued and two persons has to declare turnover differently. So, but as far as customer is concerned, this single order. So these kind of practical difficulties are there in this new change. And also that the another question is, what if my total sum of the business is done through e-commerce operator and my own business is not exceed 20 lakhs? Am I not liable for registration? The answer is no. It will be total turnover will be considered for threshold into 20 lakhs. So even your own turnover of the restaurant is do not exceed 20 lakhs. But if supplies done through online platform and together includes exceed 20 lakhs, you have to pay. You have to register under GST and pay GST on your own sales. And the sales done through e-commerce operator, they will pay. Swiggy and Zomato will pay. And wherever GST is paid by restaurant, they will give a tax invoice. If it is paid by the e-commerce operator, they will give tax invoice. So basically, whoever paying tax, they will give tax invoice. And restaurant, the e-commerce operator need not reverse any ITC because they are paying GST at 5%. And wherever restaurants under covered and composition scheme also, the same compliance will be there. And Swiggy or Zomato will pay GST at 5% on the food sales done through their platform. All the other sales by restaurant, they can pay under composition scheme of 5%. So the disclosure also is covered. And TCS, as far as TCS is similar to this income tax TCS, this GST TCS is also there. E-commerce operator has to continue to pay deduct TCS on the all other sales, like wherever GST is paid by the now Swiggy or Zomato, then this TCS deduction is not required, so they will not deduct. Other than this, that for example ice cream sales I told, there TCS is still required to be deducted by the e-commerce platform and deposit to the government account. Whereas sales which are like biryani sales, so the TCS is so more required, and total amount excluding the tax has to be given to the restaurant. And e-commerce operator has to mandatory register. And I think the ITC part I have covered. Yeah. Another all other charges, like for example this Swiggy or Zomato, they will collect, or any other e-commerce operator will collect various charges like delivery charges, packing charges, all that. So there is no change. That continue to be liable for GST in the same hands of the e-commerce operator. So they have to pay GST at 18% because it is pure services, and it will not mix it with the restaurant service because they are not supplier of services. Similarly, commission charge to the restaurant, various packing charges or any other material given to the restaurant, same, there is no change. Only change is that food value sales which are done through e-commerce operator will start paying GST and restaurant will stop paying GST. That is the difference. And the reporting also, that's necessary reporting, whatever is being done by the e-commerce operator, they have to do it. And as I was saying, the circular was given. Some of them are not incorrect. Some of them are not correct, which are may going to change in future, either by the courts or in the government themselves may come and clarify the mistakes. This is so far the changes done in the context of the restaurant. So hope I'm clear. If wherever any confusion is there or any further questions are there, you can put it in the question and answers. Would like to answer at the end. Then the next change related to the government projects. Here there are some rate changes happened to the governmental contracts. Please note the changes are only for the works done through government corporations or like government authorities and boards and all that. Wherever works are directly awarded by the state government or central government or local authority, there is no change. The rates are as is. It is particularly, this change is also for not all services. It is only for the construction related or works contract related services, not for every contract. So there are some exemptions. It is not that all government contracts were disturbed. Only selected government contracts are changed, and that too it is done through a government entity or authority only. It is changed. I have given the list of the nature of the contracts, which they have changed from GST rate of 12% to 18% increase. So this like irrigation contract or non-commercial constructions, if it is done to a government authority, that is corporation, irrigation corporation, or like housing corporation, then only it is changed. Suppose if the work order is directly awarded by the INCAD department, that is irrigation department of state government, that is then there is no change. That 12% is going to continue. If it is awarded by the irrigation corporation, that is separately legal entity was formed to award the contract, in that case only this change will be there. Otherwise there is no change. And similarly all other nature of works also same. So the line of change is that only the work is awarded by the corporations or the other board or entity set up separately, separate legal entity is formed by the government, then only it is changed. If it is directly awarded by government, there is no change. And this change, whatever is there, it is applicable both for main contractor as well as subcontractor. And also there is one of the nature of the work which was shifted from 5% to 18% is this earthwork or excavation contract. Here again the same. If it is directly awarded by government, then there is no change. If it is done through corporations, then there is a change to 5% to 18%. And whatever the practical impact, what we have to look at is whether the rate revision may have to be made, because earlier the contract would have been finalized saying that GST is 5% or 12%. Now we may have to go back and revise the contract wherever possible. And whatever the ongoing works also there is a section 14 which says wherever there is a rate change, there says 3 events you take, that is supply event, service, that is amount received, and also the invoice raising. So invoice raising, payment received, and completion of the work. 2 out of 3, if it is done prior to change, old rate will apply. 2 out of 3 are done after change, new rate will apply. For example, the RA bill was given to the government before 31st December, and also I raised the tax invoice before 31st December. In that case, old rate will apply, though I received the amount from government department or government authority after 31st December. Suppose either of the 2 of them, suppose I raised invoice after 31st December, but work was completed prior to then, and amount also received after 31st December. There, because in 2 out of 3 happened after 31st December, the new rate will apply, and 12% or 18%, whatever the change, has to be paid. So that is another impact we have to see. And also wherever there is a ITC accumulation because of earlier being 12%, whereas input is charged 18%, that can be wiped off now because there is an increase in the output rate. So wherever there is project is not workable because of rate change, either to the government or not, so that can be represented to the particular government authority and ask for escalation or to government to withdraw this change. So at the end, with this change, government is not going to get any major revenue, because it is after all that government authority, the funds will be given by the government only. And only thing is some administrative reasons and also some funding reasons, they create separate corporations. So where whatever the extra GST they are increasing here, that finally it has to again have to come back from the same government pocket. It's like taking from one pocket to keeping it another pocket. Otherwise, there is no extra revenue government is going to get because of this change. Practically, because at the end it is only government corporation which has to reimburse. So these are some examples of government authority or government entity I have given it, like AP Transco, AP Titco, TSMDCL, like Mineral Development Corporation, Police Housing Corporation, Tourism Development, like this. There are examples for better identification I've given. So as I was repeating, it is only if contracts awarded through this kind of entities or legal entities, then only there is this change is applicable. If it is directly awarded by the government, there is no change, and the whatever the existing rates are there are going to continue. And this change is not for all works done through these corporations. It is only selected works like irrigation, non-commercial contracts, excavation, and all that. Not every contract. Please note that as well. And this is another sector where the rates were proposed to be increased. As far as textile, though it was proposed to increase from 5% to 12%, again now it was as of now it was suspended and told that the changes will not be there on the textile sector. As far as footwear, they have increased from 5% to 12%. Wherever the MRP is less than 1,000 rupees per pair, earlier it's 5%, now it is made 12%. So footwear, they have increased the rate. For textile, though they proposed, they stopped that change for a moment because various political or economical reasons. As of now, there is no change of rate in the textile products. Footwear, there is a change. So with this, I completed my presentation on the sectoral specific changes. Now I'll move on to the important judgments which are delivered in the last 2-3 months. I'm not covering all judgments under GST from the inception. I'm only covering latest decisions. So this was to start with. This is one of the Supreme Court decisions, which was very long written judgment. The sum and substance of judgment is that wherever there is inverted duty structure, that means my output rate is less and input rate is more, there is accumulation of the input credit. So there the issue has come is, so the department has taken a stand. Only the ITC on the inputs only is eligible for the refund, whereas input services are capital goods. So though it is inverted duty is there, that they are not going to give the refund. So this the two high courts has given two different views. Gujarat High Court has said, no, when you say unutilized ITC, you are giving refund because you are paying because of inversion rate. So total refund has to be given. Whereas Madras High Court told no, only the inputs can be given and they can restrict the refund. So here both the judgment has gone to Supreme Court, and Supreme Court has given in favor of the department to say that only inputs refund only is eligible. Input service refund is not eligible, and that under the inverted duty structure. So this is not in favor of the trade. It is favor of the government decision. This is Supreme Court decision. And then another judgment is Bharati Airtel judgment. This is again department appeal in Supreme Court. The background of this is that there are some in the initial days of GST, there were 2A was not made available. So in that background, Bharati Airtel told because of 2A not being available, they could not take the available ITC. Then they have taken less ITC. Then they have asked the government to say that because we have taken, we have missed to take ITC because of 2A not being in place. So they asked for the amendment of the return, and where government told, no, if you can amend in the last month return. So because of that facility, this company is not able to adjust the excess ITC what they have, and there is going to working capital effect, because whatever the ITC they have missed to utilize for that month it is going to there for 2-3 years, that much ITC they have. And because of that, they went to court and got a direction saying that has to be given the same month, the rectification has to be done, and any short or excess that has to be refunded. High Court, Delhi High Court has given in favor of the Bharati Airtel, but this was again reversed by the Supreme Court, saying that 2A is only medium, and it is the taxpayer who has to maintain sufficient records to arrive and estimate how much ITC he has and how much he can utilize. So thereby it is again held that just because some reports are not made available cannot be reason to say that that rectification has to be done in the same month of return. They can do it in next month. So this is again in favor of the department. And this is again a Supreme Court decision where they said there was a lacuna in the GST provisions in the initial days, where because GST 3B was not in originally enacted, and it is GST 1 and 2, 3 are there. So there the rules are not sufficiently drafted to say that GST 3B is written under Section 39. By virtue of this, if it is not written under Section 39, we can say that whatever input tax rate I availed, I have sufficient time till filing GST 3. So that argument I can take, because GST 3 was not at due for filing now. We can still take that argument. However, because that lacuna was found by the Gujarat High Court and given a verdict in favor of taxpayer. Meanwhile, government has come and made a retrospective amendment. After that, this Supreme Court has told now that that amendment has come and the Bharatiya judgment so they said that 3B is written under Section 130, Section 39, and that whatever the interpretation taken by the Gujarat High Court has set aside. So thereby it is again settled now that GST 3B is written under Section 39. However, of course, with a lot of respect to the Honorable Supreme Court, this both this up and co Supreme Court has not sufficiently looked at the provisions and given a verdict, though it could have been differently concluded. So with this, I concluded Supreme Court decision. Now I'll come to the various High Court decisions under the GST. First, an important decision is related to the ITC on the normal loss. So in many industries, there is a chance for normal loss of the production, either in production or transportation or in usage, either in the inputs or outputs. So there, the department in the past, before GST also, they try to say that because you are not, your total inputs are not gone into production, so the total output has not been sold to the customer. So to that extent, ITC has to be reversed. In both the instances, various courts have held that in any business, normal loss is allowed, and only in abnormal losses cases, ITC can be restricted, not the normal loss cases. The exactly same position was the provisions under GST also would carry the same meaning. When the similar objection was raised by the department, this Madras High Court in case of air steel has clearly held under normal loss cases, ITC cannot be asked to be denied, though the sufficient, the complete output is not going to be offered, because normal loss is part of the business economies. So this is one of the important decision, and there is another interesting judgment of Madras High Court again, where what happened, purchaser instead of while filing GSR 1, he has given a wrong place of supply. So thereby, because it is not populated in the GSR 2A or populated with their places of place different state, there they try to deny the ITC, saying that your places of place is not the state, home state. Then in that case, they have gone to High Court and told that it is only clerical mistake, which was not able to rectify by various reasons. The High Court told, because of clerical mistake and and all other documents like way bill and moment and tax invoice, physical invoice, all are correctly addressed. So in that background, High Court told that is a clerical mistake has to be allowed, and they said ITC cannot be denied for this kind of clerical mistake. This is another important judgment, and another interesting judgment of Telangana High Court, of course, which was recently upheld by Supreme Court also. There, what happened? There is a way bill. There is expiry period within which the vehicle has to reach its destination. However, in this case, it could not be reached destination because of at that time there is a strikes are going on the roads, and the road was blocked. Due to that, the vehicle has to stop for some time, and the next day there is a public holiday. Because of that, vehicle has reached the destination after expiry of the way bill. In that background, when the department tried to detain and seize the goods, so Telangana High Court told just because way bill was expired, you can't presume that there is a tax evasion. You can seize the vehicle, and when all the other documents are on record and there is no evasion from the records, you can't seize the records, and that too it is because of reasons which are not in the control of the taxpayer, because we can't go and ask people who are going on strike to away from the roads, because that is not in hands. So thereby, in that background, Telangana High Court told so tax evasion cannot be assumed in that case, and vehicle cannot be detained or seized. In that against this, when department gone to Supreme Court also has agreed with the Telangana High Court judgment. So the another interesting judgment of Gujarat High Court is that wherever unconstitutional tax was paid, that can be refunded without time limit. And there are other cases where some ITC was some vendors who has given a statement saying that I have made some false ITC, and that recovery, they instead of doing recovery from that person who has given a statement saying that whatever the ITC I availed is not it is not a genuine, it is bogus. They should have recovered from that person. Instead of recovering that person, they have gone to the customers and they're saying that your supplier told whatever ITC has taken is not correct, is not genuine. So whatever liability has to pay, you pay it from your account, and that when because people are not paying, they have recovered. They have blocked the credit ledger of the recipient. In that background, High Court told if the taxpayer himself has availed bogus credit, then there is a chance that you can block the credit. But if this taxpayer has not availed bogus credit, but his supplier has availed bogus credit, but there is no the same passage of the similar bogus billing here. In that background, you cannot block his ledger. That is the judgment of the Gujarat High Court, which is again important. And another important judgment of both Mumbai and Madras High Court and Bombay High Court is that whatever there is a time extension given by the Supreme Court because of COVID-19, because limitation was extended from 2020, March 2020 to 2020 till today, 20th February 2022. There is almost 2 years time limit was extended because Corona. Because of Corona, there is a lot of restrictions at the moment, and a lot of people could not come to office and all that. So in that background, limitation was extended. So this limitation was held to be applicable for the filing of refund applications by both the High Courts of Bombay High Court and also the Madras High Court. This is also very recent judgments. And as far as the another judgment of LGW Industries also, which is again an interesting judgment, where the ITC was said to be denied, saying that your supplier is bogus and he is not genuine, and he is given like that. There are allegations against that. The taxpayer taken a ground saying that no, my transactions are genuine, and they have sufficient documents to prove about their genuineness. In that background, Kolkata High Court has sent back the matter saying that you verify the genuineness, then only you deny the credit. Don't simply go by statements of supplier and deny the credit. So that is another important judgment. Wherever department coming and saying that they are trying to deny the credit directly, saying that so and so is bogus, then if you are able to prove that genuineness, they should give that opportunity of being heard, and then only after verifying and after overcoming that that evidence, only the department can deny the credit. Not in every case of some statement was given of supply saying that something was done wrong. So similarly, there is another judgment of Bombay Court judgment where it is told even after now online filing is there for all kinds of refunds. So there is some rule was inserted in the initial days of GST where because the government portal is not completely ready for the online filing. So they introduced rule 97 where it says manual filing can be done. So because now that rule was not at all, not even removed from the law, it is still lying, and it is only circular which says everything has to come online for the refunds. So in that background, because rule 97 will prevail over the circular, the High Court told whatever the manual application filed by the taxpayer also has to be processed and should not be rejected. Karke. So that is another important judgment of Mumbai Court. And another interesting and very important judgment of Mumbai Court is in case of this Godrej and Boys Manufacturing, where they told whatever the closing balance of education says, secondary education or Krishi Kalyan says as on 30th June 2017, there was a dispute saying that whether it is eligible for the transfer into GST as a TRAN credit or not. The provisions as on 1st July 2017 also supports the point that it is eligible for transfer, and department also has understood that lacuna and they made some retrospective amendment. However, that retrospective amendment was not sufficiently worded to deny the credit. So all this retrospective amendment and original provisions all are examined by the Bombay Court in case of Godrej and Boys Manufacturing Company Limited, and they held it is eligible for the transfer into GST as a transitional credit. and that cannot be denied. And I think this Greenwood Owners Association, I think I have covered. And some more important judgments relating to the the government entities. There is a automatic or routine for the government department to impose the penalties on the government entities also. For example, some government corporation may not pay some GST or may end up making some non-compliance due to an unawareness or due to the difficulty in the decision making. All those cases, because at the end, government corporation is not going to get any extra benefit by evading tax. If it is a private tax person or private businessman, he may make some money because by evading tax. It's not every case, it's some cases. But government entities is not going to get anything. So because after government corporation which has to fund from again government. So in that background, where the department routinely impose penalties on the government entities. There is a recent Telangana High Court judgment in the context of service tax where they said if there's government entities don't impose penalty because government entities are found for a different purpose and they are not doing to business. So don't presume that they commit mistakes intentionally to avoid any taxes. That is another important judgment. And Bombay Court decision in case of this FSM medication also is another important. It is again routine for the department, GST department to call for small or big. For everything they'll issue a summons and they says you come and appear, and they don't give sufficient time and they come and ask you for different places and all that. In that background, there was instructions of the government itself where it says for every matter, don't call for the summons and don't call every time the higher officials of the company like managing director or directors or the CFO or CEO. First, you call for the regular correspondence like letters and all that. You give a letters, and if they are cooperating and they are giving information, don't be giving summons. And even if you want to give a summons and record a statement, also give it to the concerned head of the department. Like for example, if it is a finance, you can give it to the tax manager, general manager of taxation or finance. So they will answer, and at a last resort, you can take it as a higher officials. So because they are the business will be disturbed and all that. So that is another judgment of Mumbai Court, which can refer wherever some previous summons or notices are given to from the department to appear and make some uncomfortable things of the investigation, that can be referred. And it was there in the government circular also. And similarly, that the Gujarat High Court also has said that every time if you ask director or manager to come and appear before tax authorities, their focus on the business will disappear because their time and efforts will in a way affect the business, which in fact also impact the tax collections in the hands of government. That is another. So they also advise that better to avoid the calling directors or MD, managing directors or higher officials for every small and things in investigation. That is another important judgment. With this, I end my presentation. Hope I'm clear in my presentation. Whatever the questions are there, would like first we will take question and answers in the question and answer box, and followed by the further questions we'll take.
Thank you so much, Venkata Garu and Sudhir Garu, for the detailed presentation and so much of information. And now I think there are some questions in the chat box. So
yes, should I open question and answer box or chat?
yeah, we can start with question and answer.
I have typed answer for many things. People can see in the answer which are relevant. I will just highlight for discussion. While I'm answering few questions, Venkat, there is one query from Mr. Chandrakumar G.
Okay.
Regarding that bill of entry and SEZ.
Okay.
You can just go through in the meantime. I will answer the other queries. Okay. So one of the questions which is asked by Preeti Sharma, it says if GSTR1 is filed by the seller, I think she is saying that if GSTR1 is not filed by the seller, I won't be able to take the input without a fault of mine. So what she says is, what fault I have done if my vendor has not uploaded GSTR1, and why should I be penalized? Very, very valid and what you call a judicial ground what you are having. But technically, unless until the condition have been fulfilled, you will not be able to do anything out of it. This has been questioned to the department in many forums in various capacities. All that they say is, why are you dealing with this sort of a vendor? But sometimes what happens is that you are forced to go to the nearest vendor because your production should not get stopped, or your construction should not get stopped, things like that. So in such case, you will end up going for this sort of an unorganized or unrecognized vendor. So where there will be a risk when you are dealing with this sort of a vendor. So what you have to do is do an ABC analysis of the vendor and deal with A and maximum with B and try to do away with the C. So that is the only option. Otherwise, I can understand the grievance which is there in the query, but it is helpless as far as the thing is concerned. So there was one thing on anonymous attendee on the UN entities. I have typed the answer. That may not be relevant to everyone, so I am not repeating it. And there is one Mr. Venkatagiri is asking that you told for monthly GSTR 1 and 3B this month, if you have not uploaded your GSTR 3B, next month you will not be able to file 1. So what happens to quarterly? Quarterly, the reference there made is the previous tax period. So for the previous tax period, you should have completed, which will be a quarter. So that is how you will be looking at it. So Mr. Ramchandra Rao has an interesting question. He says that there is an entry in my GSTR 2B, but still should I have an original signed invoice, either manually or digitally? Answer is yes, because if you look at the conditions laid down under 16.1, each is an independent condition. There is one condition which says that there has to be an invoice. There is also another new condition which added that it should be there in 2A. So both the condition has to satisfy. Even if one condition is not satisfied, you will not be eligible for the credit. So even though you have got a 2A, 2B credit, you are still supposed to have the invoice record to be maintained either physically or digitally signed. Mr. Vikram Chandra told that we have availed the Sunwad credit. Mr. Vikram Chandra says that in a particular month of January, if I look at, I have an entry in 2B because my supplier dispatched the goods from Delhi on 30th of January, and it reached me only in 5th of February. So I can, when I am eligible to take the credit, I am eligible to take the credit only on receipt of the goods. Now, receipt of the goods is happening in February, but my entry is in 2B is appearing in January because GSTR 1 was uploaded by the vendor on January. So how to treat this particular situation? Don't worry about it. If there is there in the 2B of the previous month, you will be eligible to take the credit in February. However, you have to make a reconciliation statement. Your January 2B will be excess than your credit, and in your February it will be less. So that could be a continuous transaction. In this month also there will be plus or minuses. So you have to have a standardized reconciliation statement with which you will be able to convince the officer. So Sumant has a similar question of Vikram where he says that for 2B it has reflected, for some reason I have not taken the credit in that month. Can I take it in the next month? Yes, you can take it in the next month. No problem. You can take it up to 30th of September of the next financial year. You will be eligible to take the credit. Vikram also asks us a question: Aadhaar authentication, is it compulsory for public limited company? Answer is yes, it is applicable. Mr. Satyanarayana has some unique thing for itself, so I'm not repeating that. What will be the impact of 5% extra ITC considered during the year? Achha. So what Mr. Indrajit is saying that I took a buffer of 5% month on month because I had an invoice, but finally it never came in my 2A or 2B. What should I do with this buffer credit? Because it is not there, strict interpretation, you have to reverse the credit. However, while explaining this slide stack, I also told that up to after 1st of January, because it is part of the statute, that is the part of the GST Act, that becomes mandatory. Prior to that, in nowhere in the Act they told you should be you can take the credit only when it is there in 2B. That never came in the Act up to 1st of January. So prior to 1st of January, you have a still case to fight. If you have taken that 5% buffer credit and it has been marked by an invoice, you have a case to fight. If you be very conservative, you don't want to fight with the department, then you may have to reverse the credit. So Venkat, if you can answer Mr. Chandrasekhar Kumar's question.
I have answered in that question and answers box itself. Wherever that bill of entries are not coming from the either customs or SEZ portal, we can manually or we can raise a grievance and they can pull back from the SEZ portal. So that link for the detailed procedure is there in the GST portal, how they are given a stepwise procedure, how it has to be fetched manually from the SEZ portal, whatever the bill of entries which are not directly coming in the GST portal. If still that the procedure, after following procedure, bill of entities are still not appearing 2A or 2B, then we can produce a bill of entity copies to the department, ask for a reconciliation. So that's all we can do. Or else we can again raise a complaint to the ICAT portal saying that the zones of bill of entities are not coming in the 2A.
Okay, thank you. So there is another question by Mr. Rajendra Prasad CH. What he talks about is that GSTR1 has been filed, and one of his vendor, he has filed his GSTR1. He has also filed his GSTR3B without paying the tax. So 10 lakh is showing in GSTR1, 3B is 0. So 10 lakhs is payable, he has done. So department has issued a notice to recover from me. So what is my stand is what he is asking. So my vendor has done this. So basically when there is a mismatch between 1 and 3B, the recovery has been automatic at the vendor's hand. And there is one of the things which is called as a attachment of the attachment proceedings. So in the attachment proceeding, they will attach their bank account, vendor bank account, vendor's customer, that is we, and the vendor's asset. Everything will be attached. So this attachment notice is not a mandatory notice. It's like a garnishee. So where it says that if you owe this particular person, this vendor, instead of paying him, you pay it to me. So you can pay only when it is due. If it is not due, they cannot force you to pay. I hope that answers Mr. Rajendra Prasad's question. So next is Sumalata is saying that if it is, but it is showing in red color. So she has taken in next month, it is showing in red color. Will it make any difference? I'm not very sure about it. Venkat, will you be able to answer this query? What has happened is that I saw this was there in 2B. For some reason, I am not taken in this month. I'm taking in the next month.
Okay.
So when I'm taking in the next month, 3B is showing in red color.
That's okay. That is only population to say that we are taking more than 2B amount, because 2B is a static amount. It will only compute for the last month 1 to this month 1. So we can
you can go ahead, change and take the credit, but you should have a reconciliation statement where it will say, see, for the month of December there was a low amount compared to 2B. Now I am taking that, so both months put together I am complying. If I am able to show this, no challenge.
Yes, sir. Yes.
Thank you, Venkat. So I think that answers your question, Sumalata. Refund for 18-19 is time barred. So Venkat, you can answer that question.
Yeah. As I shown in my presentation, there are 2 High Court judgments. Both Mumbai High Court as well as Madras High Court, they held yes, Supreme Court extension is applicable to the refund filing of refund application also. So wherever that the refund application time, the 2 years is falling after 14th March 2020, they have time up to 28th February 2022, going by that Supreme Court extension order, and also which was specifically held in the context of GST by Madras and Bombay.
Okay. So we have another from anonymous attendee where he says the vendor had given him an invoice which told 101. But in his 2B, it says ABC 101. That is, there is some prefix or suffix, or the invoice number has been changed in sum and substance. So will I be eligible for the credit? Answer is yes, you should be eligible for a credit, but speak to the vendor and see why there is a difference in the invoice, which is not there in the invoice. If it is mentioned in 2B, that will have some complication. But in sum and substance, if all other particulars are matching, go ahead and take the credit, but resolve with the vendor this particular issue. So that is something important. Ankur Goyal clubs, yeah, Venkat.
Yeah. So relating to yes, sir, the whatever the joining fees or as well as monthly charges, because it is related to the association and services given by the association, GST will be liable. However, that joining fees, instead of saying that joining fees, we can say some fund and capital fund we can create and say that this is not for any services. It is only fund contribution. There we can plan for without GST.
Venkat, there is a question with Mr. Balakrishna Kesra. So
Yes,
he
sir.
has a challenge with this bill of entry not being uploaded by the custom authority, not being showing up in his 2B. So there is an exclusion that for bill of entry, it need not be there. And as far as the
Yes.
1st of January is concerned. So you can talk about that particular exclusion, and you can always convince the officer saying that if there is a bill of entry, even if it is not there in 2B, you'll be eligible for the credit. So that is something which you will be able to do. If we have Ramdas says if we have to take the GST credit of the bills are not in 2B, but purchase bills are not in 2B, but it is appearing in 2A, can we claim GST credit? Answer is no. What Mr. Ramdas is saying is that this particular month I checked 2A and 2B. In 2A it was reflecting, it was not there in 2B. Can I go ahead and take the credit? Answer is no. Law makes 36(4) makes very, very clear that it should be part of your 2B only. When it will come in your 2B, only when the vendor is uploading his GSTR1, then only it will come in 2B. When it will come in 2A, if he's saving in GSTR1, it will be there in 2A. So that doesn't mean that it is part of your 2B. So thereby you have to be very, very clear that it should be there in 2B, then only you'll be able to take it. I think that answers all the question in the Q&A box. Is there anything in the chat box also? Yeah, I think there are something in chat box also. Sir, we can avail credit after receiving the goods only, even if it is appearing to be that I have already told. If any material is 30th of the month received on the second month, that is also been considered. Mr. Vasudev Namburi is asking a question that there is one of the company under one PAN, there is Unit 1 and Unit 2. Both Unit 1 and Unit 2 they have taken two different GST registration number. My wonder, instead of mentioning Unit 1 GSTN number, he has mentioned Unit 2 GSTN number. So then what happened to the credit taken? In which case you have to ask your vendor to issue a credit note and redo the invoice or amend the invoice. Amendment, I think amendment is the better thing. So he has to amend it, and next month when the amendment is reflected, then you will be eligible to take the credit. Mr. Vikram Mahabaleshwar is saying that delay in return filing from vendor side will also delay in availing the credit too, but accounting part we need to keep that in reconciliation, or we need to postpone recognition of the expense itself. No, sir, your expense accounting is independent of you taking the credit. Don't alter your expense accounting at all. Do it as is, which has been required. And if there is a mismatch of taking the credit, make it through a reconciliation statement. Otherwise, if you are changing your accounting based on 2B or whatever it is, that will create a lot of confusion and no control for yourself, because you are dependent only on 2B. You don't even know which you have to follow up with the vendor to get it in the 2B to take the credit, if at all you are not doing a normal accounting. So thereby it is not at all recommended for you to change your accounting based on 2B. You do your general as doing the expenses recognition principle, go ahead with that and do a reconciliation. This is the same question which you already answered, na, Mr. Chandras? Premier alloy chemicals, that was the same thing, na?
Yes.
So imported goods bill of entry, it will not be there in 2B, but still you will be eligible to take the credit. Customer paid GST late to us, therefore we deposit GST in full amount late. Now department they want to penalty on the late deposit. Customer denied paying late amount. What should we do? Anything to do with you and your customer, department is not at all involved, or a consultant like me are not at all involved. Anything to do with you and your customer has to be a contractual obligation. All the department says is levy is on you. You have to pay it within time. Whether you collect it from the customer in time or otherwise, it is something to do with your business understanding with him. So as long as there is a delay payment, interest is mandatory. Satish Kumar is asking something on restaurant service. Venkat, you will take that question.
Yeah. So in case provided through e-commerce operator, providing restaurant service provided through e-commerce. So in case of services done through e-commerce operator, there is shift of liability into the e-commerce operator. That means restaurant should not pay GST. It is e-commerce operator who has to pay GST from 1st January 2022.
Unless he is having his restaurant in a hotel where the tariff is more than 7,500.
Yeah. Yes.
And the restaurant is selling certain goods under non-99 tariff entry. Say for example, he is selling a Coke at the Coke rate. That means he is not serving a Coke, he is selling a Coke as a product. For that, the tax need not be paid by the aggregator. It has to be paid by the vendor or a restaurant by himself. Mr. Belangi has a question. He is asking, I have a customer and my customer has not paid me within 6 months. Should he reverse the credit? Answer is yes, he has to reverse the input tax credit if he has not paid within 6 months to you. Mr. Vikram Chandra says, sir, after e-invoicement, amendment in the value invoice is value of the invoice is advisable, or credit note or debit note is the right practice. Any change in the value of the invoice, always use a credit or debit note. Say, for example, change in the GSTN number, change in the invoice number, or any other clerical change which has been there, only for that use an amendment. Value, always it is recommended to do a debit note or a credit note. Even a debit note or credit note also, e-invoicing can be generated. Ganesh Pai has a question. Venkat, can you take that?
Yeah. Person purchased goods from the vendor and has paid relevant tax according. The vendor provided the credit wrongly in return. Later on, was not even provided credit. So here, is it that originally has done it right and later he has amended, or it is done from the beginning it has done wrong? That is, we have.
What I understand, Venkat, what he has done is, it is a smart vendor. First, he gave you an invoice for 100 plus 18. You took a credit on 18. Later, he amended and he made 100 into 10 plus 1.8.
Yeah, got it.
So now there is no communication between the vendor also now. Where do we stand if this is what is done by the vendor?
So in that position, as long as the invoice entry is available in the GST return, GST 2A or 2B, now after 1st January it is 2B. So you can take credit, you not reverse ITC. If at all he is giving any credit note or is making any amendments, it is the supplier who is at default if he adjusts for any as a liability. So as long as the invoice is there and it is originally has come in 2A or 2B, you can take credit, you not reverse. If at all the supplier adjusts by taking this credit and for other liability, he is at default, not you. You can continue to take IT, you not reverse ITC.
I think with this, all the questions have already answered by both the speakers. So I request the members, if they have any other query or more queries about any issues, please write to us and we'll connect you with Sudhir ji and also Mr. Prasad. And we'll be circulating the PPT and also the recording of the session and also the contact details of the speakers so that you can directly contact them for any issues or anything that you like to. Sir, you like to add anything? CN Ryan, sir?
No, it's okay. So thank you very much, Sudhir Garu and then Venkata Prasad, for a very good update on the GST Act and its amendments, particularly those amendments which are applicable from 1st January 2022. So, and it is very clear and then crisp. The message was directly to addressing all the issues involved in that, this thing. So I request all the members to take advantage of all these sessions, which are meant to your benefit, and then let us combinedly organize such sessions and then take benefit out of it. Thank you. Thank you very much.
Thank you. Thank you so much to both the speakers, Sudhir Garu and Venkata Garu, for patiently answering all the questions and for such a comprehensive PPT. Thank you. Thank you, sir. Thank you, one and all.
Thank you all. Thank you for having us here. Thank you for patience listening.
Thank you. Thank you so much.
Thank you.